It's Thursday, September 17th, and you're probably going to be viewing this on Friday, September 18th. And today I want to answer the question, is the market on its way up or is it on its way down? Are the big tech stocks pulling the market down, or is the rest of the market closing the gap to the tech stocks? So I want to try to answer that by looking at the heat map. But first, and as always, I want to take you through the account to show you what's up. I'm down like $3,000, 117,200 roughly. As always, I'm just going to go through this quickly. As always, you can pause the video at any moment to deduct all your relevant information that you're interested in. This is my options positions here. Most of them are sells, the vast majority. This is the ticker. Then you have the price, strike price of the symbol, whether it's a call or a put, expiration date, how many contracts there are, whether it's a sell or a buy right here. So you can pause at any time to view what's going on. And these are all my options. I only have 3 buys on Apple. That's it. Everything else is a sell. Apple combined, the options and the position, has me down more than $1,100 alone. And then I have realty income correcting, etc. It's a bit of a mixed bag, mostly red on my end. So this is my account. This is the account tab. So you can look at it for entertainment purposes, just like this whole video process is about entertainment and maybe some education. These are my biggest positions. By return, this is by equity. My 4 biggest positions are positive still, so that's good. PCY, which is emerging markets, is dangerously close to even. But anyway, so that's that. 117,000. Okay, so what I want to talk about is my interpretation of the heat map and what I'm reading here in today's action, this week's action, this month's action, and the markets broken down by sector. And as we may know, the Nasdaq has been scoring insanely new highs, whereas the rest of the market, especially heavy things like real estate, oil, financials, have been dragging their feet. And there's been an interesting development in the last week, and so I want to bring out the heat map so I can talk about that real quick. So I'm going to switch over, and this is it. It cut off a little bit, you can't see it that well, but you can kind of get the idea. So this is what happened today. You can see the big tech stocks are down and the rest of the market's kind of mixed. But if you pull out the graph to a week performance, WEEK, it's a much different story. Okay, this is what tells the real story to me. So you can see how the tech stocks are in the red, down anywhere from like 1.2% for Microsoft to 5.24 for Amazon. But you'll see that virtually all the other sectors, with few exceptions, are in the positive, and by much higher percentages in some cases. So what that tells me is that it's just a correction in the trend. I mean, well, not really, in the tech trend. I just think that the tech stocks got a little bit ahead of themselves. Obviously, their valuations were really stretched, but I just can't see them going into a bear market here when the rest of the market is just pumping, right? If you owned anything but the tech stocks, you're doing well right now. So this gap is just bridging on the up, I think. So the rest of the markets are starting to feel some of the inflows, and this isn't anything but taking profits off of the big tech. That's what I'm thinking is happening here, because if they were leading the market on the way down, then what we'd be looking at is the rest of the broader market joining these tech stocks on the way down, right? They'd be leading them down, but we haven't seen that over the course of a week. Here's what the month graph looks like, which is kind of similar, except there's a lot of the Oops, excuse me. Didn't mean to click on an ad. That's what happens when you use free resources. All right. So there's some red in the energy section in the month because it dropped so low, but for the most part, it's pretty mixed, as you can see over here. And this is the world, by the way. This isn't just America. If you want to see the S&P 500, it looks something like this for a 1 month chart. And then the week chart is this one, which is, the week chart is the one that I think is most telling. You can see how everything is green except the big, giant tech companies. They're shrinking. They're part of the pie. So it just really looks to me like the broader market is not taking the bait. And anyone who's, buying for value is finally rejoicing this moment where, they're being rewarded, at least momentarily, for this week for not participating in the NASDAQ craze. Now, what's going to happen from here, I don't know. I'm guessing that they're going to be muted returns for the tech stocks, and I'm guessing value is going to be catching up for at least the next 5-6 months, even through the elections, before there is a reason for the markets to start buying tech again. Now that is totally may not be true. I mean, that's just honestly my guess. I really don't know. So what I want to do is I'm positioned in a way that if the tech sector has a quick snapback, then I'll be riding that wave up, right? I actually bought 18 more shares of Apple today when it was below 110, and I'll be buying more. I'll be buying more when and if Apple drops and continues to drop. I also sold some contracts on the Russian market. I'm trying to get into that. Also sold some put option contracts on some real estate, some oil. So I'm trying to get into these big heavy sectors, and I'm almost hoping that they drop down there so I can kind of establish a position, because they're currently the only position I have established is with Shell, and I already sold a call against it as well, so I'm going to be collecting some money there. But I want to get into things like Schlumberger and Wells Fargo Bank and some real estate REITs, Simon Property Group, what have you, and of course Realty Income. So I'm really looking to stock up. Realty Income, by the way, has had a very uninterrupted earnings, which is kind of crazy. I don't know how they managed that. And also, they're holding really strong. I mean, they're one of the few companies that actually came out virtually unaffected during the mortgage crisis in 2008. So they're working with some kind of magic. I mean, I pulled out their information multiple times to just see what's going on, and it just looks like they aren't, they are overpaying. They have 200% payout ratio, but they're just so good at balancing their books, and I'm pretty sure that they can withstand the current shock fairly well and continue to grow. I'm not very worried about them. I'm looking to put actually a very large portion of my money into Realty Income. I think it's very stable. However, it is pricey, especially compared to other REITs. So those are the sectors I'm really trying to establish positions in: financials, oil, real estate, and that's it. I just don't see much value out there in the rest of it. And of course, precious metals and tech has been my favorite plays in the last 6 months or so, and that has definitely played out well. They're the two most, biggest gains out there, and I've sold some call options on some of my precious metal stuff, not on this account, and I actually exited my silver plays very early, unfortunately, for mediocre gains, actually very slim gains compared to where silver is right now, even after the downturn in the last week. So I sold out pretty early off of that, but I should have, anyway, just timing mistakes. So, but I'm trying to transition more from precious metals and tech into some of these value plays. So I was trying to catch this wave, but it just didn't go hard enough. And this week could have been a big beneficiary for me if I was faster on the trigger. But I'll continue to try to accumulate these value plays and reduce my exposure to tech until things kind of stabilize and balance out a little bit, which I don't know when that's going to happen or if it's going to happen, but that's the shift that I'm taking right now. I'd be interested to know what kind of shifts you guys are making with your positions and whether or not you care about this kind of rebalancing and playing around in different sectors, or if you just have a different strategy, like you're just doing strictly options, or you're doing like value and options, or long-term tech investing, or whatever your methodology is for marketplace and accumulating capital. I'd be interested to know what each and one of you actually is doing. That's part of the reason why I started this video logs, to talk to y'all and relate to other investors. So I'd be really interested to knowing that. So comment below and let me know like what type of strategies you favor and what you use to accumulate wealth and grow your account. All right. With that said, I'm going to end it here. It's kind of a short one, just my thoughts on the overall market and what I think is going on here with the dynamics. There's actually another, I talked about bifurcation of market months ago. Now it seems like it's branching out. So out of the lower end of the fork, okay, so that we have tech and precious metals on one side and everything else on the other side of the fork. But now the bottom side of the fork seems to be branching off. Okay, so it seems like oil, real estate, and financials, the three things I'm trying to get into, are starting to slowly climb out of that sinkhole, whereas things like, hospitality, travel-related stuff, they're still in the dumps. So it looks like the bottom side of the fork is also splitting. And if I'm smart enough, I'll be trying to catch that wave early enough. And I have been unsuccessful to do that so far, but I'll try to get good entry prices as we progress through these markets. All right, so that's it for now. Let me know what your style is. I'm really interested to know how y'all grow your account. All right, peace out.